Balancing trading with a full-time job is something I've seen so many people say is an impossible task. And most of these people that want to trade but feel discouraged because they believe that in order for you to be a trader, you need to be on the chart 24/7, which is not true. The best time to start something was yesterday. The second best time is today. In this video, I'm going to share with you a very simple strategy that I teach our members, people that have full-time jobs, kids. They basically have just an hour to spend on the charts. And in this video today, I'm going to share with you a very simple strategy that I teach them, and a lot of them are using this strategy to make consistent profits, pass prop firm challenges, and get funded. There are two things to know. The first is to understand the structure, and the second one is to know how to use the Fibonacci. In order to understand the structure, you just need to focus on the highs and the low, and then look for the potential break of structure. You can see this impulsive move here. In as much as right here, price broke above this high and closed above it, confirming a break of structure. A lot of traders will be skeptical whether this is a confirmed break of structure because of this week's. But as you can see, price eventually broke above that high, closing above it significantly. And as you can see, we have this low resistance liquidity. Our focus is on this last move to the downside before the expansion to break above this previous high. This right here is our focus. We draw our Fibonacci from the low to the overall high in order to derive our extreme discount zone. The reason why we want to know where the extreme discount is resting is because if we were bullish, that would be the cheapest price to get in. And right here you can see the confluence aligning the price could potentially come to the extreme discount zone. The confluence is this low resistance liquidity. A lot of traders, their stop losses will be resting right here. The second confluence is this last down close candle before an expansion to break this high. The third confluence, extreme discount level. Now, if you're in my mentorship, I've already outlined the settings for this Fibonacci. If you still go through a lot of my videos, I also given that out as well, and you can just look right here. You can screenshot this, copy the settings, and use it for yourself. Now, the fact that we're bullish does not still mean that the moment price comes down here, we just click the buy button. We still have to wait for confirmations. We wait for price to show us a smaller time frame shift in market structure once it comes into our point of interest. This key level is our point of interest, our buy zone, the extreme discount zone. This is our buy zone where we want to start accumulating buy positions right here. So once price is in there, we want to start accumulating buy positions. But firstly, we want to see a 15-minute shift in market structure. In order to make this simple and not complicated, we're currently on the 4-hour time frame. You can just count 3 time frames to the left, 1, 2, 3, and wait for that time frame break of structure. Once price is in here, this key level at the extreme discount, we want to see a 15-minute shift of market structure. You just count 3 time frames to the left. 1, 2, 3. As you can see, if you have a busy schedule, you have a full 9 to 5 job, you basically need to do nothing for days until price comes in here. And the moment price comes in here, it's going to take you about 5 minutes to 10 minutes max to pull up your charts and look for the high and the low. So I'm going to show you exactly what you need to do. And right there, you can see the moment price comes into the extreme discount zone, all you need to do is spend 5 minutes, look at your charts, go to 15 minutes time frame, mark the high, mark the low, put an alert right here at this high, and then get back to work or whatever engagement you have. That is it. You don't even need to spend an hour on the chart. 5 minutes, put an alert here, get back to work or whatever engagement, and then allow price to do its thing. Whenever the alert hits and you see that the 5 minutes high right here has been broken and price has closed above it, all you need to do is to spend the next 5 minutes calculating your risk using cashback forex. If you use cashbackforex.com, you will see how to calculate your risk. Usually, I always tell all our members to use around 0.15 to 0.3% max per trade. The reason for that is because risk management plays a huge role in your trading journey. You need to protect your capital at all costs. You're risking little to make big. Your trades should end in one of 4 ways: either a small loss, a small win, a big win, or a break even. You should never allow your trade to head into a big loss. Risking anything above 1%, in my opinion, if you're learning how to trade, you should never do that. Risking above 1% simply means you're already anticipating to blow that account, because the moment you take 10 to 20 consecutive losses, that account is down and you're going to be losing a lot of mental capital. You're going to be on a mental drawdown and you will feel like you're not going to make that back. Before you know it, you start over leveraging, over trading, and blow that account. That is why I always teach people to use low risk and high reward. Now, the moment you see price mitigate your extreme discount, you want to see a break of structure. After the break of structure, the moment your alert hits and you pull out your phone and you see that price has passed through this key level, and you can see that it has also closed above the high on 15 minutes time frame, the next thing you're gonna do is to start to scale to the higher time frames to identify the last move to the downside before going up to break that structure. And as you can see, this was the last move to the downside before going up to break that structure. You can see it very clearly. This right here was the entire last move. If we go to 1 hour, so we can see it a little bit clearer, you can see this was the last move. This right here was the last move before breaking this structure. You use this key level, the last move before breaking structure, use that as an entry. Put a buy limit order. This is going to take you 5 minutes. The moment the high is broken, 5 minutes should be enough to place the buy limit order right here. Entry here, 70% of the time, if the analysis is going to go towards your direction, is going to mitigate this position. Stop loss, resting this low right here. Use this low as your stop loss. You can add an extra 1 to 3 pips below this low. And right here, entry, and right here is your stop loss. Take profit position. As you can see, right here we have this inefficiency resting right here. And as well, you can use the extreme premium zone as take profit position. You can use the inefficiency here because that will act as a draw on liquidity to attract price to the upside. But overall, gold is bullish, so I'm still anticipating for price to rally above this low resistance liquidity resting right here as well. So you can also use that key level as a take profit position, but personally I will be aiming for a 1:4 risk to reward ratio. And as you can see, price came into that position and then we had an accumulation at that key level. Price expanded, came back again, mitigated it once more, left low resistance liquidity resting right here, and after that we saw an expansion to smash the take profit at a 1:4 risk to reward ratio. So basically this trade would have taken you 10 minutes. The first 5 minutes would be to identify the 15 minutes high that I outlined. The moment you identify the 15 minutes high right here, it will take you 5 minutes. The moment price hits your key level right here, you put your alert right here. The moment price hit the extra discount, you put an alert here, get back to work or whatever your engagement is, or you're going to school or whatever. The moment you hear the alerts go off again, breaking above the 15 minutes high, you place your entry right here, stop loss right here, and then you get back to whatever you're doing. Allow price to do its thing. 10 minutes, that's all it takes, and you're in that trade. You've set your limit order and you're back to doing whatever you want to do. And at the end of the day, you come back again, you set your alert at the take profit position, and as you can see, price delivered nicely to a 1:4 risk to reward ratio. So if you found this video insightful, give it a thumbs up. If you want to be a part of our member, feel free to drop me a message. And if you do have any questions, anything you want me to talk about in the next video, feel free to drop it at the comment section. I appreciate you, and I'll talk to you all in the next video.